Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A second consecutive indecisive pattern yesterday. This time it was an indecisive doji cross. The market tried continuing its rise this week after late last week's dip, closing once more over the April 2020 low at 107.25, and also piercing once more the bright red bridged upper time, currently at 107.43 of the late December 2023 to early March 2024 bearish shift pitchfork. However, once more also the market failed to close over the bright red upper time. Now further up we have the May 2020 low at 107.66. This May 2020 low is interesting as it is the gateway to all the congestion of all the moving averages overhead that stretch from 107.69 to 107.97, so they're quite packed in there. Overall, the market is still outside and below the mid-April to late June ascending expanding wedge pattern. This ascending wedge pattern is quite interesting as it attempted to be a transition pattern for a move up and out of the bright red bearish shift pitchfork in the first place. Admittedly, the downside primary target for a break lower out of the pattern, well, that's already been achieved, though it still leaves a much harder secondary target, target X below, down at 106 even. Personally, I have strong doubts about this right now, about achieving that level. I'd now like to review a pair of ideas I floated in earlier times. Firstly, we have had a bow tie formation 4 weeks ago. Now, setting aside the fact that the moving averages went in and out of the bow tie in the wrong order, I had earlier been more concerned by the lack of response of the short medium moving average and the long moving average, which is still lacking response now. They are both flatlining, which which leaves the short moving average as the driver in this pattern, and that was, as I previously stated, not satisfactory. Added to this is that all we have seen this week is the congregation together of all the moving averages in a narrow range, and I'm even more troubled. Nevertheless, the theory suggested that between 15 to 20 sessions after crossover, we might see a period of volatility and possibly the start of a move. So that was between the 12th and the 19th of June. Yesterday was the last day of that window, and unless there is a surprising move today, then I'll retire this idea. Secondly, 3 weeks ago, we had a weekly key reversal down for most of the subsequent week. It looked like a rejection of that idea with new recent highs. However, by the end of that week, prices also ended in an immediate countering weekly key reversal down, so a big caution in that we might after all be starting some sort of follow-on lower from that weekly key reversal down. So far today, a weaker market with prices testing the overhead bright red upper time, but then pulling back down through the April 2020 low at 107.25, but only just. Cable, aka sterling against the US dollar. A third bullish white soldier yesterday. The market also closed for a third consecutive time over the combination of the 50% Fibonacci line of the June 2016 to September 22 move and the September 2020 low, both at 126.99. Prices utilized this combination as a base and rose up to just short of the overhead and omnipresent bright red highlighted July 2021 to date breached downtrend, currently 127.41. Meanwhile, below, we have the flatlining mauve highlighted medium moving average, currently 126.38, as well as the short medium moving average, currently 126.18, and the 50% Fibonacci line of the July to October 2023 move at 125.90. Late last week, prices broke out below the dark blue highlighted April to early June bull channel. I had thought of looking at this pattern as an ascending wedge pattern, but I'll leave it as a bull channel for now. Now, so far today, further dip to the combination at 126.99, but so far it has just about held. Euro sterling. A combination yesterday of a bearish opening black Mariposa, a bearish engulfing pattern, but also a possible hammer pattern. The market is still seemingly capped by the April 2021 low at 84.70. Overall, from early May until last week, prices had formed a large bearish halfway hesitation, with potential down to the 84.30 area. This was achieved last week. Additionally, I previously pointed out how the break below the purple highlighted lower trend line, currently at 85.55, of the late January to late May expanding wedge pattern gave a primary target in the 84.51 zone with a secondary hard to reach target down in the 84.13 zone. Both these two targets were also reached last week. So far today, an attempt lower but still well within yesterday's range and looking like an indecisive spinning top right now, maybe a little bit on the big side. US dollar against the Japanese yen. A bullish closing white Mariposa yesterday. There was also a fifth bullish white soldier. It was the highest close since late April. The top side was capped once again by the bright red middle time, currently 158.31 of the July to December 2023 bullish Andrews pitchfork. Whilst below we have the dark blue lower time, currently 156.53 of the mid-March to early May bullish Andrews pitchfork. As I said last week, and so far it has proved to be so true, and I quote, "I have suspicion that we might be running between these two colourful tines for the immediate future." End of quote. Further below is the green highlighted short medium moving average, currently 155.72. Whilst topside, well, we have the start of a significant congestion area between 159.61, my apologies, to 160.34, and it starts with the May 1990 high at 159.61. Now, so far today, an interesting attempt higher, an interesting higher market, and trying up towards the high seen in late April, and right now just over the bright red middle time, which if established makes this all very, very interesting. US dollar against the CNH, the offshore Chinese yuan. A significant bullish white soldier yesterday with the highest close since mid-November 2023 and the third highest high this year. I'm wondering if the long suspected rise in this market is finally coming or not. Below we have the short medium moving average, currently at 725.03 with a dark blue highlighted upper trend line extension to the January to April ascending triangle, currently at 724.11. That's a little below that. Interestingly, this is the first bit of action and also a first close outside the previously mentioned approximate 724 to 727 congestion area. Now, so far today, a seeming topside exploitation of that move out of that 724 to 727 congestion with a new high for this year. The next topside resistance of note is the mid-November 2023 high at 731.06, which ties in with some earlier congestion in the 731 even area. As a side note, I am very tempted to look at the action since mid-March today as a possible reverse head and shoulder bottom type. But for now, I'm resisting that temptation. But I may give in. US dollar against the Mexican peso. An indecisive spinning top pattern yesterday after the previous session's bearish engulfing pattern. The cap on the market, however riddled with holes it might be, is still the dark blue upper time, currently at 1871.82 of the early April, mid-May bullish Andrews pitchfork, along with perhaps now the February 2020 low at 1851.71. Together, they seem to be reasserting their force on top of this market. It's time now to see and consider what the next pattern will be, and for this I would like to put the following idea in front of you. We have the possibility of looking at the action from 2022 to date as a potential huge double bottom pattern idea. We are now, after the rise during May and now into June, close to the neckline area around the February 2020 low at 1851.71. As this is something I saw on my monthly charts, I would appreciate at the very least monthly closes, consecutive ones ideally, but monthly closes over this level to confirm such a long-term potential move higher. Thus, with a week and a bit to go until the end of June, let's all keep an eye on where prices close on Friday, the 28th of June. So far today, not much, a slightly higher piece of action, but not really doing that much and now pulling back down again.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.